I don't see anybody anywhere on the internet teaching chaos theory, let alone actually explaining why you think chaos. And you tell me, is that confluence of levels? 2.618, bullish A, B, C, D, a harmonic pattern. Boom. Oh, what a surprise. Turns out it's also an 88.6. Brian's favorite fib. If you had gotten short off that 78.6, you'd think you're an absolute genius. And of course, the meltdown following. Boom, 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 boom. If we just look at this ES market, I think we had a really cool short setup here this morning. But again, I didn't get the divs and the market wasn't really that far away from the VWAP. So it wasn't really enough of a trade level for me to take. But we had this fairly pretty little double bottom that came in here this morning. Again, I didn't really have any divs or anything to set this up, so I was just kind of sitting on my hands. Counter trend rallied back to the VWAP, then rallied up top. And what was really interesting about this was actually the London Open right here. There is this basically is your London kill zone, and you notice that literally they opened the market up and put in the most prettiest head and shoulders top here. I mean, absolute textbook. So I get the impression that the institutional players, they basically said this shall be the top. And notice, look what they did through the New York session. All they did was rally it right back into that original market structure top. What was so incredible about this was it was also, if you're sort of saying how are they going to get the market up there, you notice this was a double bottom breakout. That means we can draw chaos levels. There's 2.618. And oh, what a surprise. Look how they rallied it right into that level. What does 2.618 imply? It's called chaos theory. What does that mean? Well, you can see whether it be the double bottom, hey, I'm a bull, or now the bullish ABCD continuation pattern, the market is moving in one direction here. But as soon as we get up into the original market structure top, this is somebody was asking recently about institutional fingerprints. This is an absolute perfect example of this. So you can see, and if you see this happen through the London kill zone, oh my fucking God, that's got Rothschilds written all over it. So quite literally, this is your institutional fingerprint, the bar that made the high plus the preceding bar. Let's see what we got here. That's 94.50, 94.50. So we can use both of these. That one doesn't really matter. That's your top right there. Bang. And so what did they do? And hopefully it makes sense, right? As I was saying there a moment ago, you even heard me say on the free broadcast earlier, it's one thing to sort of, well, I subscribe to this guy and he says, well, when a moving average is tagged, I hit it. It's quite another to understand the mechanics of why this stuff is happening. Why is this called chaos theory? Do you understand that the market was moving up, double bottom, I'm a bull, bull A, B, C, D, I'm a bull, buy, 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 buy. And all of a sudden, something changes. At this level, mathematically, things should get chaotic. And here, the chaos is, well, everybody was a bull on our push up top here, and then all of a sudden, hey, some guys that actually originally shorted the top through the London kill zone, they're like, hey, I'm going to sell when I come in here. So now you've got all these bulls, rah, rah, rah. And of course, does the public buy down markets or does the public buy up markets? The public buys up markets. So the market's racing higher here. What's the public doing? They're coming in and panic buying. And they're coming in and panic buying right into the institutions panic selling because they're like, fuck, don't let the market get up through that high. Hence, chaos. The market gets chaotic. I don't see anybody anywhere on the internet teaching chaos theory, let alone actually explaining why you think chaos. And then you tell me, is that confluence of levels? 2.618, bullish A, B, C, D, a harmonic pattern up against institutional fingerprints. I mean, you could make the argument that this has got to be like something like 88.6 or something along those lines of just this range. So we go reload zone. Boom. Oh, what a surprise. Turns out it's also an 88.6. Brian's favorite fib. If you had gotten short off that 78.6, you'd think you're an absolute genius. And of course, the meltdown following. Boom, 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 boom. I think that's what basically is happening here. I'd also say, too, this dotted line, of course, is our euro close. So does it not make sense? that late on a Friday afternoon, if you had anybody who bought these lows, or really anybody who was short off the top, as we come into the euro close, you're probably going to get a lot of position squaring, especially anybody who bought off of these lows. That's not a bad little up down bottom there with a whole bunch of tweezer lows. So into the euro close, you're going to get a sort of a backfilling, bring us right back down to the original double bottom here. And then remember we said earlier, does Wall Street have some incentive to maybe bid this market up a little bit into the options expiry here today? We go look at our S&P 500. We're at 444, 93, 91, down a buck. Where do we expect these guys to want to take this market out? Where's the heaviest open interest? Can you see how Wall Street's got their nuts in the ringer here? All the way up to 447. If they can somehow get the market up above this 447, then only these puts expire in the money. And really, I might even argue, don't be shocked if we see some fucking crazy ass rally out of nowhere coming into the close so that they can get this market all the way above these strikes as well. The only question is, are there a lot of calls out there that they really don't want to let expire in the money? Notice the heaviest open interest on the call side, but remember, a lot of these are covered calls. So this is a lot of retail, but the heaviest open interest, you can kind of see that the open interest really starts ramping up above, say, 446. 13,000 is not too bad, but these 20s, 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 then there's big 40 up here. I don't think they really want these to expire in the money. And then notice, look at what they're on the hook for now. It's almost nothing. It's laughable in comparison. So my hunch is they really want this thing probably to go out just above that 445 level. And if we come down here to 445, I'm actually a little surprised that there's this big number here at 447. That actually tells me that that's where they want this thing to go out. So with all that said, don't be really shocked if you happen to see that this market gets bid up 2 or 3 more points here. Maybe they even confirm this wider W. And if they can really ramp it up here, then of course Wall Street hits a massive home run.